There are a lot of different business costs to keep up with. Fixed, variable, operating, product, period, sunk, out-of-pocket, indirect. Thankfully, you're a smart, willful small business owner, so no cost goes over your head. Well, except for one. That's right, today we're talking about overhead costs. If you want the full lowdown on overhead costs, check out the article below. And don't forget to hit like and subscribe for more videos from our series, Ready, Set, Goals. Before we calculate your overhead costs, we have to figure out what they are. There are two factors that can help us determine if a cost falls in the overhead category. One, it's a fixed cost, and two, it doesn't directly result in sales. Overhead costs are the constant expenses that always have to get paid, regardless of how much revenue you're pulling in. It's those costs that just come with running a business. So, let's play a game called Is That Overhead? You'll see some common expenses show up on the screen, and we'll decide if they're overhead or not. Rent and utilities. If your business has an office space, you have to pay the rent and utilities that come along with it. This is a constant cost that you know will pop up every month, and that makes it overhead. How about insurance? You know, you'll be paying it. It protects your business from different risks like natural disasters, theft, and damage. Definitely an overhead cost. Repairs and maintenance. Overhead cost. If your business uses a lot of machinery, you'll need to factor in maintenance costs. Most machines need a checkup once a month to make sure they're running smoothly. Is your machine running? Well, you better go catch. Never mind. Did someone say office supplies? Your printer, computers, refrigerators? Okay, these aren't exactly reoccurring fixed costs, but they don't result in sales. That's an overhead cost. Accounting. Whether it's an accountant or accounting software, fixed accounting costs don't directly result in sales. So, overhead. Taxes. Most common property taxes are fixed costs. They don't change and don't result in sales. Overhead. Spoiler alert! This next one is not an overhead cost. Whether you have 1 employee, 10 employees, or it's literally just you, direct labor is not considered an overhead cost. Why? Because your employees help in the production of goods or services. The same goes for outsourced work, directly related to producing the goods, so they're operating expenses. Now that we're familiar with some common overhead costs, let's do some math. You'll want to figure out your business's overhead percentage as a percentage of sales. To do that, use this formula. Take your monthly overhead costs, divide by monthly sales, and multiply by 100. That will give you your overhead costs as a percentage of sales for each month. Now, if you're in over your head in overhead costs, here are some ways to reduce them. Cut unnecessary expenses. Maybe you're spending too much on office supplies. Consider buying in bulk or switching up to a less expensive ink. Trust me, it adds up. Office space. If your rent is eating at your profits, consider looking for a less expensive place. Or consider going remote. No office space, no rent. Review and negotiate contracts with suppliers. Think of this as a cleanse for your company. Go through all of your contracts and pricing. Cancel the contracts you don't need and negotiate outdated ones. This is a big way to reduce overhead costs. That about does it. You can now identify, calculate, and cut overhead costs to keep your business running. So, you better go catch it!